What is up, traders? So Bitcoin did it. We seen a new all-time high on October the 20th at 9:42 a.m. Eastern Standard Time. So what do we do now? Well, a pullback would definitely be something to wait for. If you want to see my entire analysis, then make sure you stick around until the end. If you are new to the channel, welcome. If you are indeed trying to tighten up your technical analysis skills, then you are in the right spot. If you subscribe and hit the like button on this video, you will become the best intraday trader in the entire world and have untold wealth and prosperity. I took along on Wednesday the 20th watching intraday price, as that is what I do best, and I seen Bitcoin had made an intraday support at $63,792.75. That was hourly support. We were getting close to the New York Stock Exchange open, and I was kind of looking for a bear trap. A bear trap being a rapid move down and a lower close, but we did not get that. Instead, what happened was Bitcoin came in for an hourly test of support and had a bullish pop. I was watching this take place, and when price started to react bullishly, I entered a long position at $63,916. I wanted to get my stop loss under that hourly wick low, and by targeting the old-time high, it gave me a beautiful 2-to-1 setup. Once my target was hit, I took profits and moved my stop to break even, expecting a short squeeze and continuation. However, this did not take place. What did take place was profit taking, and once the profit taking started, it has since continued all the way up until the time of making this video. So what now? All of the indicators are stretched out to the bullish side of things. At the close of Wednesday's trading, the RSI was at overbought regions tagging 78.20, and the daily 21 exponential moving average was around 56,840. So it is a little bit stretched out or overbought. When something gets stretched out like this, you're definitely looking for a corrective phase. This can take up to several days or a week or so to happen, so we will be looking for that support. From the time that we found support at $40,719, price has been exploding to the upside. Couple a short squeeze with FOMO-induced news in the form of a new Bitcoin ETF, and you get FOMO buying. This propelled price up to almost 65% in just a few weeks. So I'm going to let price pull back to find support. There are multiple areas where this could take place. Since we do not know what price will do ever, we must let it happen naturally through the process of price discovery. The first daily support is $60,877, but yesterday closed below that, so we will look to the next area at $57,487. The 21 EMA will more than likely catch price before this price is tested, but it comes in real nicely there, so we'll have to wait and see. I have done some slope analysis to see if there could be multiple confluences at this price, and there are. Now I know the chart looks a little busy, but just bear with me. I took a pitchfork from August 5th's low, tacked the top end of the pitchfork to September 7th's high and the low of September 21st. And boom, you get a slope that looks decent and in line with the current impulse phase of this price leg, putting a line to mark our possible support at $57,487. You can see the confluence. Looking at the pitchfork alone, you can see that it does look nice, catching the October 6th high as well as the October 11th and October 14th highs. Then the breakout occurred. The top of the pitchfork caught the all-time high break of the October 20th candle's close, and thus a pullback has ensued. Looking at the daily, Thursday the 21st looks pretty ugly, and it has had continuation on Friday, and this morning it is bouncing from a 2-hour intraday support. So I will be keeping a close eye out for another support test for possible bullish entries, but by the time I get this video uploaded, some of this may have already played out, but that would be approached as a day trade only, as there could be a deeper correction down to the confluence area, but also it could just take off from here. We will not know until time progresses. Technical analysis does not tell you what price will do, it tells you what you can look for and where. Your rules-based strategy should tell you if an entry is valid or not. I also have a trend line that also looks to verify the slope, tacking it to the high of August 13th as well as the high of August 23rd, and that looks pretty good as far as slope goes. There really isn't anything else that I can see for possible resistance in the form of a trend line. Now I will use trend lines when looking for resistance once you have a breakout and price is in the discovery phase, but they are indeed subjective. You can see this just by me clicking on the log button and then toggling logarithmic off. The slope analysis is not valid anymore, and also the trend line is not valid. So just keep that in mind when you are looking for trend lines and other slope analysis tools. And if it is possible, look for ones that are valid on both both logarithmic and standard scale. Another tool that you can use for bullish price discovery, or also known as a breakout, is the trend fib extension tool. This tool is also subjective as well because people can use different anchor points. And since the anchor point gives you possible price targets, different anchor points will give you different targets. It's best to be in the asset before the breakout occurs, as you can exit when you see a massive selling event, as that could mark the top of the bullish phase of the market cycle. Since almost everybody is bullish on Bitcoin, we need to find decent anchor points. What we can do is look at the old all-time high price of 19,891 and see where the breakout pullback was. And that looks like this. If we take the Fibonacci retracement tool, tack it to the breakout price or the old all-time high, and drag it up to the April 14th high at $64,899, you can see that the 786 retracement level held price as support. Now, if you have shorter term bullish targets, you can use a fib extension from here. So we will delete the retracement and pull up the extension, using the June 20th low and anchoring it to the September 7th high, then finally the September 21st low. You can see that we have already hit one standard deviation from this price swing, or this leg of price. This is where it starts to become extended, as this would have been a good place to take profits. But obviously price can always go higher. This will just give you possible price projections. Now for the longer term bullish folks out there, you can use the original breakout at $19,891, anchor to the April 14th high and all the way down to the June 22nd low. Your price projections are now wider and higher. As the shorter price leg we have already hit one standard deviation, you can see that on this projection, one standard deviation would be at $73,783. So longer term, the one spot 618 deviation gives you a price projection of $101,583. Obviously, if price breaks out again and becomes very parabolic, it is impossible to know where it will or can go. So if you are new at price analysis and you want to know my opinions as to what I'm looking for near term and long term, you can crush that like button. Also, subscribe and hit the bell notification for when I go live or upload jewels like this one. You can follow me on Twitter if you like as well, at trade_talk_. Thank you so much for your valuable time. Make sure you trade safe, make sure you trade smart, and as always, happy trading, everybody.